Hello everyone, welcome back to another episode of Boss Economics World. Today, we're diving into Japan. Yes, Japan again. The Bank of Japan, BOJ, just can't seem to get its house in order, and it's reflecting some of the biggest issues that economies all over the world are grappling with. If you've been paying attention to Japan's monetary policies, and, come on, I know you all are, you'd know just how much its central bank is struggling to communicate its next moves clearly and effectively. So, let's dissect what's happening behind the scenes with the BOJ, and why this seemingly niche issue goes beyond Japan and highlights global economic challenges. As we break it down, it will become quite clear why the BOJ's case sounds eerily similar to what we've been seeing elsewhere: hints of mismanagement, market fluctuations, and a growing disconnect between policymakers and reality. The dot plot debate. Now, you would think something as simple as deciding whether or not to release a dot plot, that's a set of interest rate projections, shouldn't be such a big deal. But here we are, deep in the discussion about what the Bank of Japan should do. So, here's the breakdown. During its September meeting, some BOJ board members suggested the release of rate path projections, similar to the Federal Reserve's dot plot. But the minutes show that other members shot down the idea quickly. The biggest issue? It boils down to trust in the central bank's policy signaling and the public's interpretation of it. The concern is that numerical projections of the policy interest rate would range too widely to provide a clear message. As one member said, projecting rates might not lead to effective communication. Why not, you ask? Well, when the Fed releases a dot plot, it provides a roadmap to markets. Investors can react accordingly, plan, hedge, and strategize. But for Japan? It's been so long navigating ultra-low interest rates that a sudden switch to providing rate projections might confuse, rather than clarify, the message. It also risks baking uncertainty into the system if people see projections range wildly across scenarios. And let's not forget what happened last July when the BOJ raised borrowing costs. It sent shockwaves through markets globally. The Nikkei 225 tumbled like it was on a slippery slope, posting one of its biggest record drops. Japan's stock market plummeted amidst this sudden shift, wiping out billions in the blink of an eye. And it wasn't just Japan, the ripple effects knocked over dominoes in markets far from Tokyo. So, what does this tell us? Well, it highlights the central issue, pun intended, about modern central banks: communication is monetary policy. Miscommunication leads to mispricing, overreactions, and, perhaps worst of all, market instability. In Japan, clear telegraphing of monetary direction has not been the BOJ's strong suit, which brings us to the bigger issue: policy transparency and credibility are in doubt, and that's dangerous for the global economy. One of the themes we've been seeing globally, and not just in Japan, is how central banks are at odds with how transparent they should be. The global economic landscape is filled with uncertainties: the potential for recession in the US, persistent high inflation across Europe, and the continued slowing of China's economy. The big economies are all tied together in this web, and Japan's mishandling of communication looks a lot like what happened with central banks elsewhere. We saw a similar issue play out in the US, where the Federal Reserve, with its now famous dot plot, projected a path for future rates, only to have inflation rear its ugly head and force steeper rate hikes. The lesson here? Providing too much information, especially if the data is uncertain or contradictory, can create an even messier situation. So, what data can we look at to understand why the BOJ is in such a sticky situation? Let's zoom out and consider Japan's broader economic picture. 1. Inflation. For decades, inflation has been Japan's elusive target. After years of deflation, inflation finally started to creep up in 2022. In October 2023, core consumer prices, excluding fresh food, rose 3.5% year-on-year, well above the BOJ's 2% target but still below the levels we see in Europe or the US. Still, Japan is dealing with inflation without the robust growth required to offset it. 2. Wage growth. Japan has also suffered from stagnating wage growth. Over the past decade, real wages have barely budged despite rising productivity. Japan's companies haven't passed on larger profits to employees, and that's keeping consumer demand weak. Stagnant wages mean that while inflation is slowly climbing, people don't feel wealthier, just more burdened. 3. Demographics. Then there's the demographic time bomb. Japan's population is shrinking. In fact, it's projected to lose nearly 39% of its current population by the year 2100, according to UN data. What does that mean for the economy? Fewer workers, less consumption, and increased pressure on the government to fund welfare programs for an aging population. For government debt, let's not forget that Japan's debt levels are astronomical. Japan's debt-to-GDP ratio is over 260%, which is the highest among advanced economies. With this kind of fiscal burden, large-scale public investment or significant economic stimulus becomes almost impossible without leading to fiscal crises. These data points paint a sobering picture of Japan's economy. The BOJ is trapped between trying to stimulate growth and inflation while also maintaining market trust amid growing pressures at home and abroad. Of course, the BOJ's predicament isn't happening in a vacuum. In our increasingly interconnected world, other central banks are paying close attention. The European Central Bank, ECB, has similarly struggled with communicating its policy intentions clearly amid a complex and fragile economic recovery. The ECB has been in a fierce balancing act, attempting to hike rates to combat inflation without choking off growth completely in countries like Germany and Italy, which are dangerously close to recession. Then, there's the United States. A wide majority of BOJ watchers, more than 80% in fact, according to recent analyses, are expecting another rate hike from Japan before January 2024. Meanwhile, the Federal Reserve remains on a rate tightening path, despite its own internal debates about the ideal course of action. Note that when the Fed sneezes, the whole world catches a cold. The BOJ doesn't want to find itself completely out of sync with global policy trends, a very real risk if Governor Kazuo Ueda and his team remain stuck in an indecisive loop. Ultimately, the real issue at hand isn't the debate over a dot plot or whether to release projections, it's about credibility. The Bank of Japan is losing credibility at home and abroad. Its efforts to guide markets have been lackluster, its internal debates have spilled over into the public domain, and the resulting confusion has caused widespread uncertainty. Time and again, BOJ's policy surprises, such as the unexpected rate hikes in July, have triggered market volatility, sending tremors far and wide. Moreover, as economies like the US signal a need to fight inflation aggressively, Japan is left in a kind of monetary limbo. How does it maintain commitments to loose monetary policy while other global central banks embrace increasingly hawkish strategies? Looking ahead, the Bank of Japan will face increasing pressure to provide clarity and credibility. The world expects Japan to play its part in stabilizing the global economy, but doing so will require more robust, predictable actions. Whether that's through the release of dot plot-like projections or a better communication strategy remains to be seen. Japan's situation is an eye-opening example for other central banks about how not to handle policy signal failures. It's also a reminder, especially to the laypeople out there, that what happens in central bank boardrooms has enormous and far-reaching consequences on stock markets, your pension savings, unemployment rates, and inflation levels. Here's the kicker, the BOJ might seem like an isolated actor in distant Japan, but its struggles are part of a global pattern that reflects how vulnerable our interconnected economies have become. Whether it's the Fed, the ECB, or the BOJ, central banks are finding out that traditional control tools aren't working as effectively anymore. Inflation, demographic challenges, and fiscal pressures are making the old models less useful. In many ways, the biggest lesson for central bankers around the world is this: no matter how much data you have, if you lose public trust, you'll lose control of your economy. Will the BOJ recover? Or will it fall further into indecision as it grapples with these unprecedented pressures? We'll have to wait and see. That's all for today. Be sure to subscribe to our channel and leave your comments below. What do you think is the root cause of these global monetary struggles, and do you think the BOJ can pull itself out of this drift? I'm Boss, and this was your Boss Economics World for today.